Guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, I wanted to provide an update on Bitfarms Ltd. They just came out with their Q3 numbers a couple of weeks ago, and I finally had a chance to sit down and take a look through the numbers. There's a couple of things I definitely wanted to call out in this earnings release, and I think you'll find super interesting. Now before we get into it, please take a second, hit the like button, you guys. It's a huge help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to do so. And let me know in the comment section below if you're currently holding shares of Bitfarms, how you think they stack up to some of the other miners in this space, and what you thought about their Q3 numbers. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we're going to be taking a look at Q3 earnings from Bitfarms Ltd. Now I realize these came out a couple of weeks ago. It's been a busy couple weeks on the channel, but I definitely wanted to take a few minutes and go through this earnings release, give you guys my analysis or my 2 cents on where I think Bitfarms stands going into the back half of 2022. Now as you can see here, they're currently trading under $1. Bitfarms has now broken below $1 Canadian. They're sitting at 86 cents on the Toronto Stock Exchange, trades under the ticker symbol BITF, same ticker on the NASDAQ in the United States. This is one that I'm heavily invested in. I started buying in the $2-3 range. I have call options and shares of Bitfarms, and despite the pullback in share price, this is one I'm really optimistic about and super excited to hold in my portfolio moving into next year. Now we're going to talk about that a little bit later in the presentation, but before we do, I wanted to jump into the earnings, which as you can see here came out about 13 days ago, and based on the pullback that we've seen over the last couple of months, Bitfarms is now sitting sub $200 million in terms of overall market cap. Now, if we look at a 6-month graph, you can see back in the middle of August, Bitfarms was trading just below $3, so it has been a very rapid decline. And I think for anyone who's got a long-term outlook here, the fact that you're now able to pick up shares for 86 cents is absolutely phenomenal and should position us very well, moving not only into the recovery of Bitcoin, but into the next halving event, which again is scheduled to take place in 2024. And that's actually what I've been focused on in terms of my strategy here, is buying call options on Bitfarms and Hut 8 Mining that are dated for January of 2025 to really bridge or gap over that next halving event. Now, if we jump into the third quarter report, you can see this dropped on November 14th. The big headline is positive adjusted EBITDA of $10 million for Bitfarms. Another couple highlights here I'll list off before we get into the main article. Direct cost of production came in $500 lower and is now sitting at about $9,400 per Bitcoin. So we've talked a lot about input costs here between the various different miners. Bitfarms is definitely a standout in this category, and that's what really gives me a lot of confidence in this investment. They mined 1,515 Bitcoin in Q3 and about 486 in the month of October alone. So you're really seeing the results of that increasing hash rate. They exited the quarter with 4.2 exahash per second online, which was up 17% from Q2 or June 30th of this year. And the final stages of their Canadian expansion projects, which we're going to look at in their investor presentation, are on track for completion by the end of this year. So definitely some bright spots or things to feel confident about in this press release. Now, what I wanted to spend a little bit more time on was actually the cost of each Bitcoin and a couple of comments that were from the leadership team here. So number one, you can see Jeff Morphy, who's the president and COO, talks about Q3, and he specifically calls out they reduced their direct cost of production by 5% to $9,400 per Bitcoin. And in addition to that, they actually drove greater efficiencies and discretionary reductions in cash G&A or general and administrative expenses that contributed to further savings, meaning their total cash costs of production declined by 16% and landed at $14,300 US per Bitcoin in Q3. So they're down 16% quarter over quarter to land at that 14.3 figure. So despite the pullback we've seen or the crypto winter we're currently experiencing in the price of Bitcoin, this company is still managing to make money on each and every Bitcoin that they mine, and that's what's allowing Bitfarms to continue to generate positive cash flow from operations and post $10 million in adjusted EBITDA as we saw in the headline. So I have been critical in the past of companies like CleanSpark and Bitfarms who are constantly selling off Bitcoin out of their reserve, as opposed to Hut 8 Mining, who really has that hold on for dear life strategy. However, depending how long this crypto winter lasts, these companies are going to need to raise money, and I'd rather see them sell off Bitcoin like this than further dilute shareholders by issuing at-the-money raises or issuing additional shares to the general public. Now, they did revise their hash rate guidance or targets down for the end of the year from 6 exahash to 5 exahash. So that's what the next paragraph here talks about. That's really to do with some of the import restrictions in South America for the big new farm in Argentina. But despite that, their hash rate is up 180% year over year. And again, they exited the quarter at 4.2 exahash per second, which is super encouraging and really sets Bitfarms up quite nicely for that recovery in the underlying price of Bitcoin that I think is coming in the next 6 to 12 months. And the final point mentioned here by Jeff Morphy really talks about the company's balance sheet, which we're going to spend some time on towards the end of the video, because I think this is super important as we've started to see some of the big players in the crypto space like FTX, for example, go bankrupt. I think it's super critical that management teams in this industry have a clear line of sight to their balance sheet and pay a ton of attention to how they're positioning their companies to really weather this storm. Now, as we continue to move through the article, you can see total revenue for the quarter was $33 million, so down about $9 million from Q2 of 2022 due to the depressed price of Bitcoin. Gross mining profit and gross margin came in at $17 million and 52% respectively. So again, both down quarter over quarter. And as we discussed a little bit earlier, G&A expenses or general and administrative, excluding non-cash share-based compensation, so bonuses or stock options, were down $6 million or 15% from Q2 of this year. Now, as a result, Bitfarms did put up an operating loss of $98 million. This is in large part due to write-downs in their crypto reserve, so $84 million non-cash impairment charge and a $44 million realized loss on the disposition of digital assets. So I'm not really paying a lot of attention to this section here because, again, I believe in the long-term price of Bitcoin, and I think we're going to see a strong recovery long before Bitfarms has to liquidate this reserve. And with that being said, the net loss came in at about $85 million or 40 cents per share. Now, throughout Q2, they did a number of major moves in terms of the financial situation of this company. They sold nearly 2,600 Bitcoin for gross proceeds of $56 million. They used that money to pay down $15 million of their Bitcoin-backed loan facility, which reduced it to $23 million. That's what's still outstanding. That means they lowered their interest expense by $2 million per year and freed up about $5 million of the required Bitcoin collateral in excess of the principal loan outstanding. So when we talk about strengthening their balance sheet, this is exactly what I mean. Now, they also paid down their equipment-backed term debt by $12 million, which further reduced their interest payments. And they amended their Bitcoin-backed loan or the terms of that loan and extended the maturity out to December 29th of this year and reduced the collateral requirement from 143% to 135%, with the interest remaining unchanged at 11.25%. Now, I spoke a little bit earlier about these at-the-money raises, which we've seen the team at Hut 8 Mining has authorized. They also did this at Bitfarms during the quarter, so they raised $13 million of net proceeds through an ATM or at-the-market equity raise program. But again, this is a drastic reduction from what could have happened if they weren't going to go in and actually sell off those 2,600 Bitcoin we saw within the quarter. So overall, a fairly strong quarter for Bitfarms despite the macro situation we're seeing in the crypto environment. And I think the company really is weathering the storm as best they can, considering the options or the levers that the management team has available at this point in time. Now, if we jump over to the company website and take a look at the investor relations tab, you can see they've updated their result presentation for Q3. So if we jump into the Q3 investor presentation, a couple of highlights here we just talked about with the addition of a few new numbers. So you can see they're now mining about 16 Bitcoin per day, or 15.7 to be exact. And in addition to that, again, despite the Bitcoin that they've been selling off each month, they've still got a reserve in excess of 2,064 Bitcoin held in their custody, with a total of about 7,000 miners installed and online and 182 megawatts of capacity, which is up 33% from last quarter. So when you look at that market cap in the neighborhood of about $187 million, keep in mind 42 million of that, or about 23% of the company, sits in their Bitcoin reserve. Now this is where it really gets exciting for me as an investor in Bitfarms. Now this company is really taking advantage of this downturn to make some big strides in their operations and really increase their overall capacity as we start to come out of this crypto winter. So their production highlights here, you can see they have now 10 farms in production covering 10 countries around the world. So Canada, the United States, Paraguay, and Argentina. They've got 182 megawatts representing 4.4 exahash of capacity throughout their entire network. And that gives them a clear path or runway to hit their goal of 188 megawatts or 5 exahash per second by year end. And again, that was revised down from 6 exahash. They've got considerable upside at their Argentina location. That's where they're waiting on some of those import restrictions to actually further ramp up that location. That's super low direct cost of mining, coming in at $9,400 per Bitcoin, which again is a major selling point for me as an investor in this organization. And the efficiency of their fleet is also one of the best in the industry, with 115.7 Bitcoin per average exahash in October of this year. So some of the companies in this space are averaging under 100 Bitcoin per exahash. So the fact that Bitfarms is up in excess of 115 is really quite impressive. And it's really these factors that give me a lot of confidence in the management team to help me justify the fact that this company is selling off a portion of their reserve each month to fund their operations. Now this slide here talks about their financial position. So this is as of September 30th. We already talked about their digital asset value or Bitcoin reserve in excess of $40 million. On top of that, they have an additional $36 million of cash. So $76 million out of their total market cap of 187 is sitting in cash or cash equivalents. So that works out to about 41% of their market cap. They reduced their debt by $27 million in Q3, and that in turn is going to drastically reduce the amount of interest they have to pay through the remainder of this year and into 2023. And speaking of interest, you can see the 2 highest rate interest loans have actually now been matured and repaid in full. So those are off their books, and again gives them more flexibility or freedom to operate their business as they see fit moving into future quarters. And then the final point here, you can see all of their financial obligations or loans actually mature before that critical 2024 halving event. We've talked about this in a number of my recent videos, you guys. I think this is a massive catalyst for the entire industry. So this is really going to be a real make or break time for a lot of these companies. And it's great to see that Bitfarms has actually strategically planned their loans and their obligations to clear up in advance of this major event. So with that being said, and to wrap up today's presentation, there's really 6 key reasons why I'm so excited about Bitfarms and why this is my second biggest position in the crypto space among all of my different portfolios. So number 1, huge market opportunity here, you guys. We're seeing companies, including Bitfarms, aggressively expand their hash rate in an industry that's historically boasted some of the world's fastest returns on investment. We've talked about that in previous videos. Essentially what you have here, you guys, is companies that are printing money. And although the macro situation isn't great right now, this will pass in time, and these companies are going to come out of it even stronger and better positioned to take advantage of this opportunity moving forward. Bitfarms is a decentralized self-miner, so they've got that broad international footprint, again, 4 countries of operations, which really differentiates them from some of the other players like Hut 8 Mining or CleanSpark. They've got the scale and expertise, so 10 farms that are currently up and operational, which are currently powering or represent about 2% of the global Bitcoin network, which makes them one of the largest players among any Bitcoin miner in the world right now. They're fully vertically integrated, so they own their own facilities. They've got the wholly owned electrical engineering subsidiary. They've got in-house repair labs and an established footprint to expand in markets with excess stranded electricity production. The 5th point here, so the efficiency of their operations. We talked about their average Bitcoin per exahash being one of the best in the industry. They've got that super low average cost of production, with their direct costs coming in at about $9,400 US, and the management team has really focused on securing long-term, low-cost energy contracts that are going to set this company up for years and years to come. Now, speaking of the management team, that's the 6th point here. So they've got an agile, multidisciplinary team. I'm actually attempting to get a member from Bitfarms on the channel here for a Q&A. So if you have any questions, feel free to leave a comment in the section below. I'd love to get that answered for you. They have a deep background in data centers, technology, infrastructure, finance, and business growth. So they've really assembled a dream team here to make this concept come to fruition. And that's exactly what we're seeing in the results that we covered in today's presentation. So for those reasons, you guys, I'm super confident and excited about this position in Bitfarms Ltd. I'd be interested to hear your thoughts in the comment section below. Are you currently holding shares of BITF? How do you think they stack up to some of the other players in this space? And what do you think about their multinational diversified growth strategy compared to some of these other operators? Now, if you're still watching the video at this point in time, hopefully you found some value, so make sure you hit the like button. And if you're not currently subscribed to the channel, McNallie Money, feel free to do so. That's all for now. Thanks for watching, and we'll see you in the next video.